Today I'm talking with Brian Thorp, the founder of WealthTender. WealthTender is an online service that can help individuals identify and discover financial resources that they might be in need of, whether it's a financial advisor, financial coach, educational podcasts, or more. We talk about the important role human financial advisors can play for individuals, and we talk about how finding the right advisor doesn't mean he or she has to be right down the street from you. He also turns the tables on me and asks me about my philosophy when it comes to investing in individual stocks as part of a financial plan, which I do think is what can make working with an advisor a lot more engaging and yes, even more fun. I think you'll enjoy this conversation, so let's get into it. Here's my conversation with Brian Thorp.
Welcome to the Invest Smarter podcast, where we'll simplify investing and provide actionable ideas to help you navigate the markets and own your future. From retirement planning strategies in plain English to timeless investing wisdom, we'll cut through the noise and leave you a smarter investor by the end of every show. All content within the podcast is for informational purposes only and should not be relied upon for investment decision making. Here's your host, Dave DeWitt.
All right, welcome Brian Thorp to the Invest Smarter podcast. It's great to have you on today.
Thanks for having me. Great to be here.
Awesome. So tell me a little bit about WealthTender, which is, I see that's your company. Tell me a little bit about it and what the mission of it is.
Yeah, so I spent 22 years working for Invesco, global asset management company and financial services, and had the opportunity to focus a little bit more in the fintech space, where I'm really interested and passionate about helping people achieve their financial goals. So similar to what you're doing every day, but approaching it a little bit differently. And what I found was a terrific opportunity to really help consumers, especially the next generation of investors that are looking to feel informed and educated about how to improve their financial well-being and not being sold to by financial professionals. And so what we've really done is focused on creating a platform that is educational in nature, similar to a site like NerdWallet, if you're familiar with NerdWallet, but unlike NerdWallet, that really has focused its monetization around funneling people into credit card offers and robo-advisors. We're really focused on the human side of money and investing. So our goal is to help people, no matter where they are, no matter their income or stage of life, get connected to the financial resources that are best for their individual needs, and ultimately working to graduate people into the arms of a financial advisor, because we do believe that a financial advisor is ultimately best to help people when they're at that right point in time. But what makes us a little bit different as well is we have financial coaches on the platform for people that might be building up their emergency fund or focused on getting out of credit card debt if they're not ready to work with a financial advisor yet, but also providing a lot of great resources for people that might be a little bit more do-it-yourself and interested in connecting with over 300 personal finance blogs and podcasts that we have on the platform as well.
Yeah, that sounds really great. Like a really great mission, great idea. I know a lot of people, when they think about getting a financial advisor, they may have initial feelings of mistrust, or there's a general mistrust of the industry, or they think that they're just insurance salespeople and they just want to just like hawk you to talk to you, or they'll ask you like, can you give me a list of all the people you know so they can talk to them as well? And it can feel a little fishy at times. So I do think trying to democratize access, and to me it seems like what you're doing is maybe helping people feel more empowered in their search, whereas they're the ones starting the initiation, which is kind of how it works this day and age anyways with a lot of stuff.
Yeah, and taking it even a step further, what I found was there are a lot of sites to help consumers connect with a financial advisor, but most of those really take what I consider to be an antiquated approach of starting with enter your zip code, and then we'll find the best advisor for you. And I'm a big believer that you may very well find an advisor in your community that's great for you individually. But at the same time, we live in a world now where people can work with a financial advisor that could be anywhere across the country that specializes in their particular needs. And so a big part of our focus is helping consumers understand that location should be a consideration in finding a financial advisor, but not necessarily the primary consideration.
Yeah, that's for sure. I know us in particular, we've sort of embraced this whole work from home thing. And, you know, if our specialty is in helping people that are closer to retirement, like, and want to, or need help just gearing up and preparing for that next stage in their life, you know, it doesn't really matter where someone lives, you know, we're able to help them through that. no matter what. And, with Zoom and all of this, we can help them. So if someone's specialty matches, doesn't really matter where they live, for sure.
Yeah, absolutely. And, again, especially if you have clients, maybe they started working with you in the same area and they want to continue that relationship, but they're looking to retire potentially overseas or on the other side of the country. There's no reason that they can't maintain that relationship. And similarly, somebody that may start off a relationship not being in the same local area, I think if it's a good fit and a good match to work together, that's really the priority over being in the same room.
Yeah, no doubt. So tell me a little bit about how someone would interact with your website. Like how would they know when to even start, where to start on the site?
Yeah, great question. So what we've really tried to do is put ourselves in the shoes of a consumer and people that no matter where they are in life might be looking for different education on different topics. And so what you'll see on the WealthTender homepage is a real orientation, not specifically starting by saying, hey, welcome to this site. We want to connect you with a financial advisor, start giving us information to do that.
I know a couple firms that are like that.
For sure, for sure. And, they've built a business model that does provide personal finance education that benefits consumers. And ultimately, they've done, in many instances, a good job, some might say, depending upon the platform, to help financial advisors get connected with consumers as well. So we can respect some of the different business models that are out there, but we've really tried to put the consumer first and foremost in mind, so that when you come to the website, you can find topics, whether you're looking to get out of debt or you're more focused on personal finance topics related to your family and just personal life, or maybe your career and work, or building wealth and investing. We start by providing a lot of that education to first and foremost provide the information that you're looking for. And then while we do that, we'll start to introduce you to the availability of a financial advisor if it's a topic relevant to an area where a financial advisor could be beneficial. Or again, perhaps if it's getting out of debt, it might be more appropriate that we're introducing you to financial coaches that have services that may be able to help. And of course, there's a lot of people that consider themselves to be more of a do-it-yourself investor. And that's where, with the personal finance blogs and podcasts that we have on the platform, that provides an opportunity for people that, quote, do it yourself, but in reality are relying upon the wisdom and insights of people that are passionate about a particular topic that really resonates with them. And what we really believe is that even for those, quote, do-it-yourselfers, there's still a trajectory and a likelihood that at some point in time, they're going to be well served by working with a financial professional like a financial advisor. And so we want to be there to help them every step of the way and get them connected to the appropriate financial professional at the right time.
So tell me a little bit more about some of the pitfalls you see consumers that may feel like they want to be a do-it-yourself. And even if they do want to do it themselves, I've certainly seen from some experience that sometimes it still can be challenging, especially when things go a little haywire. Maybe the market gets really crazy and things get emotional. So, what are some of the reasons why you think ultimately working with a human financial advisor can be beneficial over a do-it-yourself or a robo option?
Yeah, great question. And I think you hit the nail on the head when you mentioned, money is a very emotional topic, and it may feel like you can do it yourself in a market where everything is going up, and even things that probably should never have gone up in the first place make you feel like you're a really smart investor. But, with the experience that I've seen, over multiple market cycles, the day of reckoning is likely to come at some point, depending upon the stock, the industry, the sector. And a lot of people, I think, who haven't been through those cycles aren't aware of just how tumultuous it can be, maybe haven't taken into consideration some of the tax consequences if they've been doing, day trading, and haven't considered, wash sale rules from an IRS perspective that could have a detrimental impact, and a number of things that, a financial professional like a financial advisor that's been through the markets and understands, that this is more of a long game as opposed to getting lucky multiple times in a row and hoping that coin flip is going to continue working in your favor every time. It's really important that if you are a do-it-yourselfer, to be very, very cautious and educate yourself to the point that if you truly want to do it yourself, you're knowledgeable enough to know the pitfalls to avoid. But for most people, I think that benefit of working with a financial professional is going to be really important.
Yeah, I think the people that are best positioned to do it themselves are people that actually have developed sort of a passion for understanding the market. and how it works long term and really buying into the correct philosophy. But that's not for everyone, and even the most tough stomach people can ultimately make decisions that they end up regretting. And you can't go on your robo and you can't call up your robo any day and ask for advice on sort of like maybe like I'm looking to move, like where's a good state to go to, or anything else. You can't really just call your robo and get that kind of advice.
For sure. And there's so much more that a financial advisor can offer beyond just traditional investing advice, as you're certainly aware. And I think that's a really important element for consumers that may not be aware. And something that we're really focused on at WealthTender is helping educate consumers on the benefits of working with an advisor, overcoming that stigma that you mentioned still exists among many. And, among many, there's a fear that if they approach a financial advisor, that advisor may not even be willing to have a conversation with them because they feel they might not have sufficient investable assets to work with a particular advisor. And so part of what we're also looking to do is provide consumers with education that there's really a tremendous amount of advisors that have varying areas of specialization as well as different pricing models to serve clients that may come from untraditional areas or that they may have otherwise thought wouldn't have been served.
Yeah, I definitely think you're doing a good thing for all of us by helping educate that, because even if someone came to us and they didn't, we didn't take them on, we would be very helpful. We would help refer them. We'd make sure we got them to the right spot because as a fiduciary, we want to help everyone. And just because we can't help you doesn't mean someone else won't be able to. And if you're younger, there's a lot of new, young, energetic advisors out there that have innovative business models for young people, even some subscription type models that are really cool. So, and if you're going to do a subscription on a robo, you should at least consider a subscription with an advisor, you know what I'm saying? Because you get so much extra touch, and some of the pricing you see is tiered such that at the beginning it's not even really that much of a dent to your wallet, and they're going to help you over the long run.
Yeah, I agree.
So tell me a little bit about how it's going with WealthTender. Are you seeing some good success?
Yeah, so one of the things that we've focused on, especially over the last year, is preparation for a recent Securities and Exchange Commission rule that for the first time in 60 years is allowing financial advisors to both collect reviews from their clients and ultimately leverage those reviews in their marketing activities. So last month, we actually announced WealthTender as the first financial advisor review platform that's designed to be fully compliant with this new SEC rule. And we think that's a really tremendous catalyst for us from a business perspective, but also a really important opportunity for consumers to finally gain greater insights into the advisors that they're researching and thinking about working with. So that's one of the elements that's really exciting. We've built a platform now that having that first mover advantage is a great place to be. There's still a time frame for many advisors to comply with that new rule before they'll be able to participate. But we're having a number of great conversations with advisors and wealth management firms who are coming on board. And then what we've primarily been focused on as well, we consider the reviews to be one important attribute of an advisor's online reputation. But what we're also focused on, even if an advisor isn't yet able to move forward with collecting and displaying their own reviews from clients, is helping advisors strengthen their reputation online and improve their online reputation. Because again, for many investors today, even if they're coming directly to an advisor's website, they're looking for validation from other sites and resources. And so very similar to a word of mouth referral, we think it's going to be important for advisors to have the opportunity to be featured on WealthTender and various articles and guides that is providing them the opportunity to build their reputation and authority in that particular area of specialization that they serve, and ultimately help consumers become more informed and educated as they are evaluating the hiring decision.
Yeah, I think that's huge. And selfishly, that's something that, maybe we'll be talking to you about because I know there's a lot. I mean, now that, we could potentially collect reviews, and I mean, that could be really huge. So I'd be interested to know how that actually mechanically works on your end at some point.
Sure.
Unless there's anything you want to share now. I mean,
Well, the one thing I would say, I think the SEC actually did, it took them 60 years, right? But an admirable job of a principles-based approach so that the benefit for both advisors and consumers is that it's pretty straightforward. It doesn't require a lot of heavy lifting, and it is disclosure-based. So it's going to be important that, if we work together, that we incorporate disclosures that the SEC requires. But I think important for consumers, it's not going to be an experience that's so overwhelmed by this disclosure that's in your face that a consumer looking at these reviews is just turned off by pages of disclosure. So I think the SEC has done a good job of ensuring that WealthTender as a platform, for example, can provide a good consumer experience so that that familiarity of other review platforms that consumers are familiar with is a similar look and feel to what they can see with WealthTender. And again, the disclosures will be there, but we'll be able to structure them in a way that's more consumer friendly and ultimately advisor friendly as well.
So you'll be able to display reviews on WealthTender on behalf of other advisors.
Yeah, actually a couple of things. So not only feature reviews, client reviews on WealthTender, but also have developed widgets that will allow for those reviews to be visible on an advisor's own website as well in a fully compliant manner. So, that's another way that we can help advisors collect and display reviews. You could, as an example with your firm, do that directly on your website, but know that you would be fully compliant with the new SEC rules by leveraging our platform.
Very, very cool. Now, will you do any help with helping advisors get the reviews in the first place, or collect them, or ways to ask clients, or in that kind of thing?
Yeah, great question. So I think one of the things that's going to be important for advisors that do choose to move forward with what we refer to as certified advisor reviews and the way that we've built these to comply with the new rule is what that initial approach looks like for outreach to clients. And I think best practices that are being recommended from some of the securities attorneys that we're speaking to is that advisors should really reach out to all existing clients for that kind of upfront push so that it addresses one of the potential concerns from the SEC that there's not cherry picking exactly by an advisor to single out, their quote best clients. And with that, there are certain things that we can do to help and provide guidance and education, but that's probably more what we'll be focused on to ensure that the approach that's ultimately implemented by financial advisors is aligns with the SEC expectations as well as your own compliance team from a record keeping perspective, and the way that those emails are, if it's conducted by email as an example, kind of facilitated as well.
That's very cool and interesting. Sounds like it could be a very great service for advisors and ultimately for the consumer as well, so they can have. That's really, at the end of the day, that's what we're all trying to help. So,
right.
Yeah. Let's see. So you said that you're not matching. So if someone wants to get matched with an advisor, you don't do it based on location or something like that, or maybe some other factors, but
Sure.
You're saying you're doing it more on need, right?
Yeah, great question. So from a regulatory perspective, matchmaking sites, and that word has regulatory significance, sites such as smartasset.com, Zoe Financial, and others are regulated by the SEC themselves as a registered investment advisor, given the nature of the matchmaking that they're actually doing. What we're doing on WealthTender is essentially referred to as an online advertising platform where we're not facilitating specific matchmaking, but rather providing education for consumers around advisors. And again, whether that education is in the form of client reviews, or one of the things that we do for all financial advisors that join the platform is provide opportunities to be featured in articles and guides that are specific to their areas of specialization. And so in doing that, what we're really trying to do is educate consumers and help consumers identify a number of advisors on our platform who are specializing in those areas of specialization. And I should mention too, again, we do believe many people will find an advisor in their local area. And one of the ways that we help provide that connection as well is through local guides that are on the platform. So advisors that are on our platform are also featured in local guides as well. But it's through those different articles and guides that we're able to educate consumers on advisors that they may choose to work with, but we're not specifically going through a matchmaking exercise like some of those other platforms.
Yeah. So consumers that go on your website, or it's a self-fulfilling search, well, they will wind up with what they may want or not want. It won't necessarily fill out stuff and then have, 5 different advisors calling them every day.
Right,
Like you would see
exactly.
with like a smart asset, where if you fill that out, then they're probably dishing off that information to a few advisors to compete for you.
Right. And so what we're doing instead is putting the power in the arms of the consumer and providing a lot of ways that they can then connect directly with the advisor. So, your profile page as an advisor, as an example, could have a direct link to contact you ultimately by email, but also direct link to do an introductory call if you have a Calendly link or a calendar integration that we can set up for you.
That's cool. That's cool. So when did you start WealthTender?
Yeah, so I spent 22 years with Invesco, and when Invesco bought Oppenheimer funds about 2 years ago, I put my hand up and said, I'll take the package, and had always wanted to get a little bit more involved in the fintech space. I've done some angel investing over the last several of years, and I've enjoyed mentoring and working with entrepreneurs, and decided it was time for me to try it out for myself. So
Right.
it's been about 2 years. Some of that time was spent a little bit more focused on some of the angel investing and other activities and mentorship, where I serve as an advisor at a couple of firms. But really over the last year that we've been focused on building the platform. And then more recently, with the advent of the new SEC rule, more focused on bringing advisors on board.
Very cool. And I did notice in your profile that you built this in a Mexican beach town. I mean, that sounds
Yeah.
pretty nice.
Yeah, that's, again, it's an unfortunate circumstances, but we tried to make the best of the COVID crisis. Usually my wife and I live in Houston, and she actually works for a large insurance company that's been very flexible on working remote. So we spent 8 months in Tulum, Mexico, which was just a terrific experience and, unique time to be there, and really worked well in terms of being able to, work from there. But obviously have a little fun along the way. And then now we are in Miami, where we will enjoy the beach and the proximity to the sun here instead through the end of the year before we return back to Texas.
Cool. So how many days would you go out onto the beach and work from the beach itself?
Yeah, not too often in terms of working from the beach.
Can't really see the screen with the sun, right?
Right. But it was always great in the afternoons to hop on my little bike, my clunker of a bike, and ride down to the beach and get the workout and enjoy maybe a Corona or two, watching the waves come in.
Yeah, that sounds really nice.
Yeah.
So you said you worked at Invesco for 22 years. What were you doing at Invesco?
Yeah, so, over the 22 years, just a tremendous group of people, had the opportunity to work in a number of different areas. The last few years was leading strategy for Invesco's sales team, and then most recently leading the key account team for the wealth management division. So in that role, we were responsible for working with the home offices of all the wealth management firms around the country, whether that be the regional firms or the large national firms, so wirehouse or independent firms. And, a lot of great experience working with advisors indirectly through the home offices. And that, really was part of my inspiration as I saw the opportunity to move into the current position with building out WealthTender.
Yeah, that's cool. So you would have been working with wealth management advisors like us, helping like selling Invesco ETFs or products or that kind of thing?
Yeah, so my team was generally responsible for the larger firms. So whether it be the Merrill Lynch, Morgan Stanley, Edward Jones, or the independent firms like an LPL. So more from a back office perspective in many instances, with a lot of the time spent working with the due diligence teams at those organizations, along with Invesco's. So, whether it was an Invesco mutual fund or ETF, like you said, or other types of investment products, we'd be working with the due diligence teams at those wealth management firms towards gaining approval for financial advisors to be able to utilize those products.
All right, very cool. Let's switch gears a little.
Sure.
So what advice would you have for someone who's maybe fresh out of college, let's say, and they obviously don't view themselves as, and they just got their first job, they don't view themselves as ready for an advisor. But what kind of advice would you give them for getting themselves educated or starting their own journey themselves financially?
Yeah, I think one of the most important things is just to be proactive. No matter the financial circumstances that you're in, whether you have a tremendous amount of student loan debt or you're fortunate to not, and whether you're just getting started in your career and feel confident in where you are, or you're not sure kind of what comes next, really just being proactive. And again, with websites like WealthTender and others online that provide such an easy opportunity to subscribe and follow along, listening to podcasts that provide education as well, and really just becoming an informed um, uh, individual when it comes to finances, whether it's truly on the investing side or budgeting, and really identifying those areas that are interesting to you that you may want to dive into further, but also then taking advantage of that opportunity to recognize those areas where you're not necessarily so comfortable, and kind of jotting down notes that help you identify those areas where you truly may be better served by working with somebody who provides those areas to complement the other areas in your financial life that you are more comfortable doing yourself.
Yeah, there's so much opportunity with, YouTube and podcasts for people to become as smart as they want with finances these days. I mean, it's incredible. I can't even imagine like how much harder it was for quick, easy education, before I was born. I was born in 1990. So, I mean, now it's just like at your fingertips. And
Yeah.
a lot of it's entertaining as and educational at the same time. So, so yeah, I mean, I think that's great. Yeah, I'm trying to think of any more questions I might have for you. Is there anything else that you would feel like you'd want to talk about, or?
Well, one of the things I noticed that you do at your organization is play a role, picking individual stocks, and, maybe turn the tables a little bit on you and ask,
Sure.
when it comes to investing, specifically recognizing the risks, but also the opportunities that come with selecting individual stocks versus purely being in an index. What are some of the things that you're looking for, and maybe even in the current market that, has maybe run its course quite a bit, in terms of how you're evaluating companies that you're finding attractive out there?
So the way that I have historically done this, and so my company was started by my father in 1990 something. And he started the business as his first niche was investing in local companies. So local Philadelphia area companies, because he'd go and visit them, get to know them really well, understand the stories extremely well, and develop a ton of conviction. And so his first clients, a lot of his first clients, it was more in the stockbroker model. So he was like pitching stocks and all of that. So I developed through my years of following him and listening to him the same sort of method of really learning to do forensic deep dives on companies and get to know them and call the investor relations and really become super, 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 super knowledgeable, where if there's any question, I can answer it. So when we do individual stocks, it is all high conviction based, where we know the company is inside and out. We listen to every earnings call. So it is becoming is more of our legacy business. It's becoming a smaller portion because as we develop more holistic financial planning, we recognize that for someone who wants a holistic financial plan, it can only be a small portion of their portfolio. But what we find is that for people that are interested in it, having that small portion be a little bit more concentrated in a few high conviction stocks where we're keeping them up to date on them and all of that, it actually can create a healthy level of engagement in their portfolio and feel like they're an owner in these companies where they understand the story. Because a lot of times when you're just in the index, you think of it of investing as just this sort of vanilla thing where you don't really understand that you're owning true living and breathing companies with real people working. So I enjoyed that aspect of it a lot. So I certainly am looking for companies. My favorite ways to find a company is either one that has been beaten to a pulp for some reason external, and then really understanding and talking to them and understanding if what are their opportunities, what is their strategic growth plan, has there been a change in leadership, and then you can sort of plant the seed there and then watch them grow, a turnaround story. Because a beaten down value stock that has true growth opportunity can be where you find the biggest upside, because from a valuation perspective, a lot of times there's not as much downside. And then once the market if they prove themselves once the market appreciates it, that's usually where there's room for a lot of runway. So that's one of my favorite ways. And then that's actually is my favorite way. And I think most of my successful stock picks have been where they started off like that, and then they grew into something a lot bigger. And then we just hold and watch the story unfold. And then selling is always the hard part, right? Knowing when to sell. Because yeah, so that would be my answer to you on that.
Yeah,
For
that's
sure.
great. And I echo your kind of philosophy in terms of really trying to ensure, for high conviction opportunities, knowing them inside and out, and also for consumers, I think there is merit in having a holistic asset allocation that maybe has meaningful percentage that's allocated in passive index funds, but also having some true skin in the game where active allocations and knowing individual stocks that you own not only provides a tremendous opportunity for potential alpha, but also just a lot more engagement. Like you said, I think that was a good word for it, to feel like you're truly connected and maybe a little bit more inspired to open up the Wall Street Journal or turn on CNBC each day to truly understand how individual companies that you own can be impacted by the day-to-day goings on of the market and the economy.
Yeah, because there really is, I find there's two kinds of potential clients. The ones that just want to hand everything off to you, and they just want to make sure they're on a glide path towards their goals. And there's others that want more engagement, and they want a little bit of that extra sauce or excitingness. They accept that there's maybe some extra volatility, but they want someone that they can call and ask about, what's this stock all about, and then where their advisor can actually might have some ability to truly analyze it and give them some advice and talk about it together. Because I think that's fun for me. So I think that's something that we definitely offers. That sort of if you want it, of course we have to figure out if you want it, but if you want it, we can give you that extra excitement. And there's always opportunities. Even in these crazy bull markets, there's opportunities to find underfollowed, undervalued, lesser known sort of interesting opportunities. We find the way our culture has sort of found opportunities in just interesting ways, where one of my dad's first clients got on the board of this small healthcare device company a few years ago, and then he just started following it. And he was like, "Hey, what does this company actually do?" And what this company does is they have a device where you put on your fingertip, and it can detect whether or not you have peripheral artery disease in 5 minutes or less than 5 minutes on the software. And the old school way of doing that was putting a blood pressure monitor on all 4 limbs, and it took 30 minutes and had to train your person to do it. And this tiny little company that was like a 50 million market cap has been just crushing it. And then, we got in it. We talked to the CEO all the time. It's only 7 million shares outstanding. It's one of these really unique opportunities that no one knows about. No one knows about this. I'm not going to mention the name just because, it's a little extra of a headache, but so that's sort of kind of the ways we sort of come across some of our ideas.
Yeah, that's great. And, I've done a fair amount of angel investing as well. And, you mentioned the medical devices. I mean, being in Houston, the opportunity to gain exposure with the medical center there to some of these small, in these instances, private companies, but really interesting ideas. And, when it comes to innovation, I think a lot of people naturally think to Silicon Valley type technologies, but there's so much innovation underway in the medical device and, biotech space that is really exciting to see.
Yeah, there really is. One of the most exciting things that I've been watching, following, and investing in, of course, is some of the 3D printing technology, especially when it comes to healthcare. But that story, as I don't know if you several years ago, there was a huge amount of hype around it, and some of the 3D printing stocks just went through the moon. And it was all based on this idea that every single household was going to have their own 3D printer. So there was this huge consumer story that just completely flopped. No one ever ended up buying their 3D printer. But 3D printing stocks have just been doing nothing for so long. And meanwhile, they were investing the dollars, figuring out where it actually was going to go, and the dollars were meant to be going to the industrial use case, the healthcare use case, the aerospace use case. And now that it's starting to unfold, that was one of those opportunities where these stocks are doing nothing, but that's potentially the best time to just start looking at them. And they have been doing better. Of course, some of them got caught up in you always have to, when the market starts going crazy, you have to dissect what is true fundamental growth of this price
Sure.
and how much of this whole meme stock thing is infecting some of this stuff. But when you develop a strong level of conviction, it's much easier just to say, I don't care, I'm going to hold it, because even if we're, overvalued now, we know that we're not trying to sell this and wait for it to come down 30%. We're holding this for the next 10 years, and we're following, the growth, and we're following the fundamentals, which is, when you have conviction, it's much easier to stay pat.
For sure. And it's always fun when you invest in a company based on its fundamentals, and then it gets caught up in some of the craziness that gives you a good potential exit point as well sometimes.
Yeah, definitely an exit point, at least for, short term, just keeping things sized correctly and giving your clients a little bit of a win. But yeah, I mean, so that's my view on individual stocks. Of course, it's always in moderation. But yeah, and then our holistic approach is actually really cool, because Scott Frank, who we work with, he actually developed a software which we use as our main sort of tool for constructing portfolios, where it's actually optimizing universes. It could be a universe of ETFs or a universe of individual stocks. It could be whatever the universe could be, but it's optimizing to just to smooth out the ride, to sort of minimize volatility. So it's just looking at the correlation and all stuff. It's got some magic that, we're a little bit, we keep close to the chest, but it's really great. And if you can participate in the market with lower, with potentially less drawdown, potentially less upside, but smoothing out the ride doesn't mean you don't get to where you want to go. It just means that you may have a smoother, less emotional journey to get there. So we love that differentiator for us as well.
Yeah, that's a great way to help clients sleep better at night, for sure.
Yeah, no doubt about it. All right. Well, I guess I'm glad we got to talk today. That was fun.
Yeah, thank you. Appreciate it. It's great catching up.
So let's talk offline as well. But Brian Thorp, I really appreciate you coming on the show.
Pleasure is mine.
Email
Thank
us
you again.
at investsmarterpod@gmail.com with questions to be highlighted on the show. Thanks for listening, and keep investing smarter.